Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Wednesday. I almost said Monday. It's Wednesday. My brain goes one way, I talk the other. November 6, 2019, right after 3:30 p.m. Central Time. So we had a mixed day today. You try to rally in the wheat market, and it failed against what I'll call a window envelope top. If any of you use that study, it's one to be looking at. In the corn market, further downside, harvest is in full swing. Those farmers are out there. They know the cold weather's coming, moisture's coming. They're watching it, and they've got those things. If they go 30 miles an hour, they're pushing them at 40. They're doing as much as they can to bring it in. And in the bean market, some pressure. Now, there was more today because the supposed date of signing a trade deal, and I use the word supposed because I don't even know how far we are on the trade deal, let alone a signing date. But for the signing date, we had heard originally, they're looking for another source. Iowa looks good. This place looks good. Alaska looks good. Well, now we're hearing that there is no November signing, that maybe we get a signing around the NATO meeting early December in London. We still don't know if there's a deal. We don't know how much China is pushing and the U.S. is pushing back on China about the tariff situation. We are hearing today, positively, that China has taken up the illegal transfer or forced transfer of intellectual property. I haven't seen laws. Policy is not law, but a lot to come. When the market heard there was no signing, you took the air out of the grain market to a degree, and you certainly did it in the hogs, which got hit pretty hard. Yet I'm reading a report today from, I forgot the source, it might have been a government source, where they're talking how long it's going to take China for its pork to get back to normal. And they need at least 3 years of solid pork production in imports to just get back to where they were, but they don't think their industry is going to be normal. Could be another 10 years or more. So again, it fits in with everything we've been hearing. So let's take a look, if we could, at the charts and get a feel for what they're doing with today's confusion. That's probably the right word. We're down 9 cents for the week so far in the weekly area chart of closes of beans. But the fact that the market's staying over the 18-week average of closes, the red line, tells me the bias is up, but we're in a corrective mode. Harvest time makes all the sense. When you look at the chart, you can see that the market is working its way gradually down, but it's not trending in the process. The trend was lost right through here, this day, when this high took that out. Up until then, you had a nice pattern of lower highs, lower lows. I think you'd agree with that. Then you got that rally, and now what you're caught in is a market spinning its wheels in between that low and high. That's what I think's going on. As for where did the market stop? I call the red line, and you know it if you're a regular watcher of this, the line in the sand. It is the number that I call neutral. So if a market has gone up, it's not uncommon for it to come back down to it and fight a battle at it. It didn't do a great job of it right here. It did a phenomenal job in continuing the break, coming back up to it and stopping there. It's a zone. That's what you're looking at. Does it have to hit the number exactly? No, but you know what you're looking at. You're looking at that zone. To me, even more important is I use the red line to establish bias. Now, what do I mean by that? When the market is over the red 18-day average of closes, I have an upside bias. It is filtering my other signals. It's saying you have an upside bias and then blah, blah. I teach this all in my charting course. You have to have, if you've ever flown a plane, you have your checklist before that airplane moves out of the hangar, before it moves into the runway for takeoff. If you don't, you got a real problem. Well, it's like a trade. You're checking off the things that make up the trade. And as I'm looking at that, the market has downside bias, but the swing line's got a higher high and lower low. So I don't have what I'd call the ideal setup. Support, the lower Bollinger Band. The market went back to the 18-day average, so I would expect that, like, when you get to it, it's like a pinball machine. You ever play the game? And the physical ones, not the electronics. They're fun. But if you shook them too much, they tilt, and they have a reset button. When you hit the 18-day average, it resets numbers that used to be support, they're put back in as support. Otherwise, you hit them, and it's like your kid knocking down a fence. Until you put it back up, you don't have any resistance there. Well, now that support's back here. It doesn't have to stop the market, but it's live all the way down to the 100-day average of closes in green. In terms of momentum, oversold. So I have a market with downside bias that isn't trending on in the swing line, and it's oversold. In the meal market, I have a higher high, lower low, back down to the lower Bollinger Band. Now, this is a different looking chart where again, the swing line's not trending, but look at the slow stochastics. Both numbers are here under 20. Both were under 20 the day before and the day before. You have an embedded reading. That's the definition, at least 3 days. Okay, you can have more, I don't care. But now that you've had it, and you had that coming in today, it tells me that on the rallies, the pros use this over everything else, and they're bearish until that red line closes back over 20. Yes, they will pay attention, I think at least, to the lower Bollinger Band, and the resistance are these two numbers. But this is the most important part of the chart. That's what I think it's running off of. In the oil market, what stopped the upside rally was the Bollinger Band. I don't care that it went through it next day and now it's back down and back and forth. That's the resistance. You saw it show up here and then it fought a battle and there. Is the bias up? The bias has been up. The bias has been up since the beginning of October. So you know that you've got what? A bullish bias to the market. You're overbought. You had an embedded reading you lost. The market made its run towards the 18-day average, regrouped itself, and it's tried to come up. It's not the best of bullish signs because often what you get in bull market in the soy complex is meal leading oil. You're not getting that here. In the corn market, outside day down, you went right back down today, challenged the lower Bollinger Band, settled at 378 3/4, literally right on it, 79 1/4 is the number. Oversold, trend down, sideways action. Can it break out to the downside or is it going to fail against that? That's what the trade is betting on. Wouldn't surprise me if the Bollinger Band holds the market. If it breaks down, c'est la vie. The trend is down, but you're oversold. I do not like selling into lower Bollinger Bands or buying into them. I teach that in my charting course. In the wheat market, higher lows, higher highs. An attempt at a move up. As I said, if you have window envelopes and you understand how to apply them on the chart, you actually went up to one of those. That's in my morning subscriber video. It's never here. And it was, last night I was looking at that going, even though it's bullish, I question if it can make it through that, and it didn't. Sugar market, this is an area of big resistance. The combination of the 100-day average and the upper Bollinger Band in an uptrend, you hit it and it's like hitting a brick wall. That does not mean it's a signal to go short, but it's certainly an area that I think the pros are taking money off the table and deciding what do they want to do next. You have an overbought market that's hit an upside in an uptrend. In the coffee market, this is different. You've got to recognize when you get these embedded readings. Now, the hardest part is when they first form because you're always overbought. The money was made getting up to these two numbers. Now the question is what happens? You got your embedded reading. So I'm looking on breaks for what? The pros to keep buying until that red line is back under 80. And that's what I expect to see. Doesn't mean it'll go forever, but this is certainly the support area. And intraday, do I look at where the slow stochastic is? Of course. I told you that I think the hardest market right now for the commercial end of the market is this cocoa with these new rules in Ghana and the Ivory Coast. And if you don't see that this market is just hitting this number every day and no follow through, okay. But like everything else, it resolves itself. And once it resolves out of this, you'll get something reasonable to trade. Do I see it now? I see nothing on this chart. See a lower low, higher high, lack of follow through, momentum flat. Doesn't mean you shouldn't trade, I just don't see anything. In the cotton market, I see a market that is trying to work down, but it's already oversold. Got two big layers of support. We're in harvest right now. Resistance is the 18-day average. We've hit it 3 or 4 times, well, 3 times looking at that. And I can't seem to get a trend out of it. The market got itself, I say, in trouble this day, right here. You had an outside day up. When you took that out, now where's the swing line? Is it here? Is it the high of that? When I don't know, I just walk away from a market. And even if I know, doesn't mean I'd be right. In the cattle market, as long as you keep the embedded reading, and cattle got hit today and hit good. If you take a look, you finished 119, but you got to 118.20. The market took no signing of a trade deal date is bearish in the meats right off the bat. So you backed off, but you're still in an uptrend. You're backing away from the upper Bollinger Band until you lose that embedded reading. I say the pros are still buying this market. Feeder cattle lost its embedded reading intraday. I was watching that thing. It's got to get away from that if it's any good, and if it does, the resistance is waiting for it right at the upper Bollinger Band. It did not take out the previous low of 143.15, which I think was good, but it needs to get up and run, otherwise it has a real serious problem. And the hog market down 2.5 cents as there's still no purchases or talks of it from the U.S. side. We keep hearing Brazil and other countries are getting big deals done with China, but not the U.S. And, you know, that's the tariff issue they put on us. But lower low, higher high, into resistance at the 18-day average. And I'll say it again. When you break down, the first challenge of the 18-day is often a resistance point. That's what it's doing. It's also got the combination here of the 100-day average. We'll see where it all carries. We talk about all this and more in our research that we write here at Linn. Now, if you're in the grains, in the meat markets, you're going to find that our research, I think, is right up your alley. We're talking who bought what the commercials are doing, what the specs are doing. If you're in the elevators, what we're seeing on the different basis points everywhere. As a speculator, you don't want to read that necessarily. It's going to be to you Greek. But you want to read what we think the pros are doing in the market, buying, selling, which way are they thinking the market's leaning, why, what's the weather like. We cover all that for you in all this. Now, you just sign up for what you'd want. So when we get you going on this, you get just what you want delivered to you in your email box. You may never want to know about what's going on in the treasury market if you're trading in the grain market, right? So we'll let you customize that. How do you get this info? Well, number one, it's a trial basis. It is absolutely free to our clientele, both of our research and, of course, those that trade through us. How do you get it? Go to our website. We'll set you up with a free trial. You'll go there. You're going to see free offerings. Go to that part of the website. You just click that box. It opens up for you. You can also click here if you're watching me on YouTube. That'll get you there. And, of course, the easiest way, which very few people do, is you pick up a phone and you call, and bingo, in 5 minutes, you're getting everything you want. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.